Let's focus on another stock. That's Cummins India. That's the next corporate on our radar. Remember, they have said that they aim to grow at 2 times the GDP and increase profitability by 1% on a year-on-year basis. Well, to understand how are things shaping up, we're joined by Mr. Ashwath Ram, the Managing Director at Cummins India. Hi, sir. Good morning. Thanks so much for joining in. Well, let's focus on the CPCB4 norms. That's going to be coming into effect in the next few days or so. So give us, a couple of aspects. One, how has demand been? What kind of pre-buying have you seen out there on expected lines? And more importantly, what is the price increase you've managed to push through?
So demand has been very robust. Price increases are expected to go up anywhere in the range from 20 to 50%. So with that in mind, we see a lot of pull from the market at this stage, especially in the current quarters, because the transition is supposed to happen on July 1st, after which we will not be able to sell the old product.
Yes.
Demand is pretty robust right now. Typically, when these kind of transitions happen, after the transition happens, with the pre-buy, there is a little bit of a drop-off. And then over the next couple of quarters, demand starts to pick up. So we are still in line with our thoughts on what we think the improvements in pricing will be post the transition.
Okay, all right. Just a quick question on the CPCB, the old engines, as you said, you could still sell them, but you can't manufacture them. You'll be sitting on some inventory. Can you quantify that, the old engines?
Yeah, almost a quarter worth of engines will be in the pipeline between our genset OEMs and the market dealers. So roughly, we expect that level of demand to be spread over the next 2 quarters, and gradually the CPCB4 plus engines and products will transition.
Mr. Ram, hi, good morning. You said 20 to 50% price increases. This has already happened, sir?
This will happen post July 1. So it has not yet happened as of now. But post July 1, all the price increases will be announced.
Okay. And these take the cost to manufacture is higher, and hence the price increases, I'm assuming?
The price increases are mainly because of the change in the technology. You're going from completely mechanical engines meeting CPCB2 norms to CPCB4 norms, which are equal to Tier 4 final norms in the United States. So these are very, very stringent norms. So all engines become electronic. They also need to be added with after treatment. So these are entire new subsystems which get added to the product. And that's why the increase in the cost. A similar kind of trend was seen even in the automotive industry, as that industry went from CPCB3 to from BS3 to BS4 and then to BS6.
Do you expect this to have any impact on demand, Mr. Ram? This is a very, very steep price increase.
Yeah, there is always an impact on demand when there is a transition that happens. But over a period of time, we have seen in multiple markets around the world that the products that we sell are required for core infrastructure and for backup and for emergency use. So and they play a very small percentage as part of the overall infrastructure cost. So companies are able to absorb those, and over a period of time, the demand gets back to a normalized kind of demand.
Okay. I want to also understand what's happening a little bit in terms of the growth in the data center business, because you are the leaders in that space currently. Can you tell us what kind of growth are you looking at there, and how will that be factored into your business in terms of a revenue potential?
Demand in data centers continues to be extremely strong. And we expect this not to be a 1 or 2 year trend, but a trend which could last as long as a decade. And we think we are well positioned for that, and we have already factored those into our overall growth plans.
So and which is Yeah, can you
Go
give
ahead.
us some numbers? No, I was just asking, I mean, since demand in data centers is so strong, can you give us some numbers on how this would affect your power generation segment? I mean, even in the year gone by, right, or rather in the quarter gone by in Q4, you had almost a 43% growth in your power generation segment. You're sitting on a base of about 700 crores. What kind of growth do you see given that demand is so strong?
See, our aspiration from a growth perspective, we have made very clear. We are aspiring to grow at 2x of GDP. There are many variables and many market segments that we play in. Data centers is just one of the market segments. So certainly, even if data center were to grow at even better than the numbers I mentioned compared to the GDP, overall, when we look at the business, we still are maintaining that aspiration to keep growing at 2x of the GDP.
All right, Mr. Ram, give us a couple of more aspects then. Exports is 25% of business. In the past year, well, you had a good growth, 27% growth in FY23. For FY24, given the global challenges that everyone's talking about, or which could creep up at some time during the year, what kind of a growth are you guiding on the exports front? Will we see high single digit, mid single digit, or can you guide for double digit? And also a quick word on the supply chain. That was a bit of a hurdle, a headwind for some part of the last year. Are things cleared out on that front now? Things are much better?
Not much better. The same kinds of challenges continue. The challenges with electronic components and the challenges with capacity on certain nodes, they continue. They will continue because it takes 18 to 24 months to set up incremental capacity in some of those spaces. So we expect to continue to have some of those challenges. As far as global demand is concerned, it is mixed in the sense that certain markets, let's say Europe, Latin America, and some parts of China have started to recover. Some parts like Africa and Middle East and South Asia are actually slightly muted right now. But it's a wait and watch. We remain cautiously optimistic that we will be able to do better than last year as far as exports is concerned.
So mid-single digit growth. Mid-single digit growth would be fair?
I would say as of now, that would be fair.
All right. Mr. Ram, on margins, I think the stated objective is to have a 100 basis point improvement in margins. This is in FY24.
So this is our aspiration. Like I said, it's straightforward for management to have all kinds of aspirations, and we've been working very hard. Growth in margins for us comes from 3 or 4 areas. One is the introduction of new products. The second is expanding the scope of the kinds of products that we produce. The third is keeping very tight control over all kinds of costs. And fourth is being able to get price leverage in the market. So we are working on all of those areas. Yes, we continue to aspire to want to have a 100 basis point improvement year on year. But as we get closer and closer to the 20% mark, it's becoming more and more challenging. It's never been, achieved and sustained before. So it gets tougher and tougher. But that's what we are paid to do, and so that's what we're working on.
Okay, well, hope you achieve your target. Just one final question. You have over the last couple of years been undertaking a capex of about 120 to 150 crores. But there are reports suggesting that this year you're looking to do even up to 300 crores. What would the capex plan be for the next 2 years, and how would you be looking to fund this?
Most of it is related to growth and to introduction of new products. And so we are not making any big investments in infrastructure. We already have significant investments there. And most of the growth will be funded through internal accruals. So we are sitting with a pretty strong balance sheet. So we have plenty of cash to make the investments.
All right, Mr. Ram, we'll leave it there. Thank you very much. Good speaking with you, and appreciate you joining us with that outlook. Well, thanks for that.